Welcome to another episode of Off the Block by 21 Shares. I'm Max, your co-host, and I'm joined today by Darius. He's back from holiday from the winter again. And we have Lucas Bruder with us as well, the CEO and co-founder of Jito Labs. So today's podcast episode will be maybe a little bit less about token prices and what's going on in the market and more about the infrastructure that's actually powering all your favorite ecosystems and all your favorite assets. So it's more about the plumbing that makes everything work at scale. And as I mentioned, we're joined by a very exciting guest, the CEO and co-founder of Jito Labs. And at the time of watching this, you guys, the audience, will probably be also aware that we recently launched an all-new ETP in the European market, one that is backed by the underlying Jito Soul. And we'll get more into what that actually means as the podcast rolls out. But just for some context, and I think this is worth noting just before I hand off to our guest today, Jito is built on Solana. And Solana has solidified itself as one of the most exciting, one of the most vibrant, and one of the ecosystems with the most activity out there. And as a result, its block space is becoming not only more scarce, but also more valuable. And at the center of this is where Jito sits. And on that note, I'd love to introduce our guest and also welcome him to Off the Block and hear it right from the genius and behind the work himself. So Lucas, this is your time to shine.
Thanks for having me. We're very excited about the Jito Soul ETP that you guys just launched.
No worries at all. The pleasure is all ours. So before we dive deeper into our first section, which is always the rapid fire questions, I'd love to hear a little bit more from yourself, Lucas, from your background. What made you actually get started in the crypto industry more broadly? And then what prompted the idea of Jito Labs itself?
Yeah. So my background's in embedded systems and robotics. So you can think of like tiny programming, tiny microprocessors and things like that. So yeah, I worked at Tesla for a bit on the Model X, the Falcon Wing doors, and anything that like moves or lights up on the Model X. So that was super cool. And then did a few jobs in San Francisco after that. One of them was working on autonomous construction equipment. So kind of like figuring out how a Caterpillar or a John Deere tractor works and like kind of putting wires into its brain to make it think someone's in the seat and control it and drive it and do like trenching and bulldozing and things like that. And at that time was kind of like dipping my toes in crypto, mainly from an investing standpoint. So got in right around kind of at the end of the 2017 cycle. Yeah, it was mainly from an investing standpoint. And as I started doing more and more research, I was like, oh, this is super cool. There's like these essentially unstoppable and permissionless systems that you can write programs and deploy those programs to that do essentially whatever your mind can come up with. Yeah, I just thought that was super fascinating and started diving more and more into it. And I discovered MEV in like middle to end of 2020, right as like COVID was kind of in full swing. So I was stuck at home just reading a bunch and yeah, discovered MEV, started doing a little MEV on Ethereum. And that was kind of my first time diving into actually programming, turning from like a kind of investor standpoint into actually building stuff. Learned a lot about how Ethereum works and the different Ethereum clients and how trading and all the smart contracts work on Ethereum. And yeah, I just kind of fell down that rabbit hole. Then I discovered Solana in 2021 and I always kind of knew I wanted to do something on my own. I was thinking about robotics at the time, but decided to do something on Solana. And so I kind of like mesh the two things. So I kind of took my MEV experience and my Solana experience from doing the first hackathon. I was like, okay, I'm going to launch like a MEV system on Solana. And so, yeah, met my co-founder on Twitter and we started Jito in 2021 and raised our first round and kind of been sprinting ever since.
Very, very exciting. And what an impressive background as well. You can tell that Lucas is far smarter than Darius and myself combined with his background.
Max, speak for yourself.
With his background in engineering. So that means also if you not only having problems with congestion on Solana, but if you're having problems with your Model X or with your John Deere, you can also probably reach out to Lucas himself. Just taking a step back there, because maybe there has been some terms or some points that you raised that I think are worth exploring a little bit further for the audience, but briefly, so we can continue on with the next section. What is, let's say, at a high level, the problem that Jito Labs aims to solve? And I guess with your experience on playing around with MEV or MEV on
Yeah.
Ethereum, what does that actually mean for our audience?
Yeah, I think I kind of think of this in two phases on what problem we were trying to solve. So when we initially started it, it was about trying to make Solana more efficient. And we saw that there was some potential room for improvement on some of the efficiency on Solana. And so that's kind of what we built. We built Jito Solana, which at its peak had like 90 something percent market share. And yeah, I think we kind of helped Solana essentially run more efficiently during the crazy like meme coin cycle in like 2024 and all the trading in early 2025. And then now I would say that we are more focused on kind of the market layer and making the application, making the blockchain really good for applications with our newer product BAM. And so talking to a lot of applications and figuring out what can we build at the like block space layer to make your application way better and unlock new features that you didn't have before.
Fantastic. So just to iron it out, you guys are about making the Solana blockchain, which is already quite efficient, but even more efficient than it is, and kind of democratizing the playing field on top of that network itself. So very exciting. And for our audience, as you can tell, the topic that we're going to be discussing today is far more based on the actual infrastructure layer of the wider crypto ecosystem. But I think with that, I don't want to spoil all the secrets of what we'll be talking about today. So I'll hand off to what I like to call the bad cop, which is Darius, to go through the first few rapid fire questions for you.
I mean, thank you, Max. And as always, I think Max is the bad cop and not myself, but I leave it to Lucas and the audience to decide on this. As we talked in our prep call yesterday, Lucas, I'm a big ETH guy, so I'm very happy that also your crypto story started with Ethereum. So I don't want to already kick it off with this big debate, ETH versus Sol. But again, Max, you see, like great guys in crypto, they start with Ethereum. But that's
Bring
also like a running joke that we have, because before we get into a rapid fire question, and we use this term already a couple of times, and especially because Max and my grandma at times watch this podcast. What is MEV? Because for our audience, I think some of them are very familiar with it, some are less. But Lucas, if you had to explain it very simply, what is MEV to you? Because it's also a big part of what Jito is doing.
Yeah. So blockchains are in the business of selling block space, and block space is what essentially all the transactions that people are doing, trading, swapping, transferring, all those get packaged into blocks, and the sequencing of those transactions matters a lot to users, it matters a lot to traders, and so MEV is kind of just the way that you essentially can like order those transactions to create value.
When you're in crypto, you know that MEV at times has been controversial. Some people see it as positive, some people see it as negative. Now, it's also a very broad term. So under MEV, a lot of different practices fall under. Some you could interpret or argue are more beneficiary and some are more extractive. What's your take on a high level on this? And I know I already take some parts away out just because we're already talking about MEV. Yeah, how do you see it and what explain it?
Yeah. I mean, it's such an overloaded term at this point. There really needs to be a different term. We've been thinking of a few terms to use, but yeah, I mean, there's a lot of good MEV. It kind of just is. I wouldn't say you can't really prevent it. You can certainly mitigate it, but yeah, there's a lot of like protocols that rely on MEV to stay. Markets and arbitrage are a perfect one. People are racing to capture arbitrage. There's a price difference between two exchanges. Liquidations is another very important one. And there's definitely many other forms of it. There's a lot of like creative stuff going on too that I guess you could bucket into the MEV category, like NFT sniping and things like that. But yeah, there's definitely some like bad forms of it too, like sandwiching and front running and things like that. And so Yeah, we try to do our best to mitigate those where we can. But yeah, we're more focused on like creating value and focusing on the positive forms of it.
And I think that's great, and we're gonna talk about this later during the pod. As Max said, we are gonna kickstart with like our first section, which is the 10 rapid fire questions. I'm gonna do the first 5 and Max the second 5. It's a little bit of an inside joke between Max and myself because we always ask our guests to give short answers. Usually they're not short and they're very long. So also for you, Lucas, while we ask you to be short, you can also be more elaborate because everyone else in the past has been the same, so it's never been very rapid when we come to the section. Starting with this, and I think you already answered this, but like, how did you first get into crypto?
Yeah, I think it was Litecoin. Well, no, I guess going back to 2014, it was a little bit Bitcoin, and then in 2017, like Litecoin and Bitcoin. Just seeing the markets move.
And it was more of an investment perspective. So
yeah.
You were convinced that those assets going to go up in price. And what were you seeing, for example, for Bitcoin, like that early in 2014, that nobody, like the whole market haven't seen at that time?
Yeah, it just seemed like an interesting experiment, and people didn't like it. So that kind of caused me to look into it more.
Okay, so more of a contrarian bet or view, you could say. The next question I have is, what was the first blockchain network that you actively used?
I would say Ethereum, like DeFi Summer. That was like the first one that I was using a lot, and I don't even want to look at how much I paid in gas. I'm sure
I think no one
stories.
of us wanna, no one of us wanna say, especially what you used to pay for the gas fees for like the NFTs.
Oh yeah, disgusting.
Disgusting actually. Even though I have a friend who is still mad about how much Bitcoin he spent on Satoshi roulette back in the day. So I think that's maybe even worse than what we did on ETH. Question number 3, what and when was your first interaction with the Solana network?
I would say there was, I think the first ICO or IDO on there was, I want to say Step. So I think I did that one, and then I did the first Solana hackathon. I think it was March 2021. Yeah, it was kind of like the IDO, and that was kind of the first like times that I remember using Solana.
And also here, Lucas, what was appealing about Solana for you? Because especially at the beginning, like we didn't know where it would end up going to what you would do with Jito. So what was the appealing thing about Solana in the early days?
Yeah, it's like more the first principles thinking from Anatoly and the founding team. I think everyone was at the time saying that the L1s can't scale. As a like study computer engineering embedded systems, it seems like it was possible, and people were kind of just shrugging it off at the time. So there's a lot of really cool tech in Solana, and that's kind of the thing that drew me into it, was the technology.
I see. What is one misconception about Solana that annoys you?
Solana is just a meme coin chain. I think that's not true. You can see the best place to buy Solana is actually on Solana, which is the only blockchain that you can say that for. The spreads are tighter than centralized exchanges, and you can get really good pricing.
And what is one crypto metric that you watch obsessively?
I would say the Solana financials and block space usage and volume of the different sectors. Specifically on the Blockworks dashboard, they have a dashboard that tracks all the key Solana metrics. So I'm looking at that a lot.
I was thinking you would say the staking yields.
No, not really. Yeah. I guess the staking yield is influenced by the block rewards and the tips and all that. So I guess indirectly looking at that, but yeah, kind of just looking at like block space, number of transactions per day, and things like that to kind of get a pulse on what's happening on chain and where things are going.
Great. Over to you, Max.
See, this is why I call him the bad cop. You know, I know he was stumping you a little bit with that last question, which I thought was an unfair one, but that wasn't my choice. Anyways, it's my turn now, and I promise my questions are a lot easier.
I mean, Max, if you start like this, you wrote those questions, so don't play like...
With that said, I think we talked about a misconception about Solana from, let's say, a more general point of view, but I think more broadly, and you touched upon this when you talked about L1s not being able to scale, but more broadly, what is one thing about distributed consensus, or, you know, this time we're talking about blockchain-based systems, that people still don't quite understand or that people get wrong?
Yeah, I would say that Solana, the thing people don't understand about Solana is there's still so much capacity to scale. If Like I was looking at our server metrics the other day, and the Solana validator is running at like 10% or 15% CPU usage. So there's still a lot more room for capacity on Solana. I think easily 5x and likely more capacity. And that will just result in lower fees for users and more trading activity.
Makes sense. And I guess that lower fees from users, or for users, sorry, depends on whether or not MEV is extremely present on that network, the extractable kind, let's say. So on that front, and you touched upon this in the introduction, but if you had to label it, would you label it as a misunderstood feature or just as a necessary evil if you had to pick one of the two?
Misunderstood.
Great. And we can drill down on that in the following sections, of course. And now back to more broadly on Solana. And I think, you mentioned that Solana is the only blockchain that can say it's cheaper to buy Solana on chain than on any other network. But there was a time where maybe this wasn't the case. And at that time, maybe post FTX, what is actually what surprised you the most since Solana's growth post FTX?
Yeah, I would say the amount of very dedicated builders that stuck around are seeing very great success now. It's definitely a very challenging time, that kind of bear market in late 2022 and 2023. But a lot of very dedicated builders stuck around, and I think people didn't really care about that in what happened there. The people that were actually building on Solana. So the core teams just kind of ignore the noise and kept building.
Something we have to do quite a lot in the crypto space is ignore the noise. On that front, what is one trend that at the moment isn't picking up any noise or is rather unappreciated?
I think there's a lot of space for everyday people to use Solana without even realizing it. So that's what I've been thinking more about recently, is like, how do we give people better financial products and better financial services that use the blockchain, and they don't even really need to know or care that's on the blockchain.
It makes a lot of sense. I mean, I think that's something that we iterate quite a lot on as well internally at 21 Shares, that is the ultimate goal, to be able to onboard every, let's call them average Joe in the world. You need to make sure that the user experience is at par, if not better, than what they're already used to. And for that, you need to mask everything under the hood. So it makes a lot of sense. And then our last question, but if you had to use one word to describe the Solana ecosystem today, what would it be?
Competitive.
Great. Well, on that front, I mean, I'm very happy with your answers. I know Darius is more of an Ethereum boy, but Solana is where everything's actually happening at the moment. And with that aside, I think we need to take a step back and think about what problem is Jito solving. And I think that ties to the story of Solana, but it also ties to how and what Jito is. And I think, if I'm not mistaken, you guys probably started with a very kind of simple question. And it's off the basis that you, at the team, you believe that blockchains will continue to be more used. And that means that block space that those blockchains are offering become more valuable. And I guess that question is, who should capture that value, and how can you capture that value, and what does that mean for a user of that network? Would you say that's correct? And maybe you can give a quick kind of short answer on what problem are you solving? Maybe one that my grandma could also understand.
Yeah. As I mentioned earlier, blockchains are in the business of selling block space. So we do a lot around the kind of market layer on Solana. So there's a few pieces of the market layer that we are focused on. There's the execution with all the you can kind of think of MEV to, like, when people ask me what is MEV, I just say high frequency trading. And so there's the execution part of the market layer, which is focused on high frequency trading. And then there's the capital layer, like Jito Sol and staking and things like that. And then there's the value capture piece. So how does the execution and the trading and all of that flow back to stakers and also Jito for providing the services that we do? So those are kind of that's kind of how we think about it. And yeah, we're very focused on the block space layer right now.
It makes a lot of sense. And I guess my next question on this would be, if you had to think about the key building blocks or what are the key elements of what you guys are building, I would argue it's not an application, it's rather infrastructure for that network. And so on that front, I think there's I mentioned and what you mentioned already, the block engine, and to be able to get these transactions ordered fairly. And then there's the portion, what we call tips, that flow directly to validators that then help with the ordering of those transactions. Would that be correct?
Yeah. So yeah, our first product was a modified validator client and a off-chain system that tried to auction off the block space more efficiently. And I would say that worked super well. We've generated over $1 billion for validators and stakers. So there's been a ton of value that has flowed to stakers. At one point, it was, I think, over 50% of the value was flowing to stakers. So that's a very large amount. And that's kind of the goal of Solana, is to you have the inflation, of course, which is just like the protocol creating new tokens to try to incentivize people to stake. But the end vision is that there's so many fees and transactions happening on these blockchains that inflation can go down and stakers can earn yield from the activity. And that's one of the main reasons to hold Solana, is because you believe that vision. And so now we're more focused on BAM, which is kind of a newer block building system. And that's really focused on applications. So how do we make applications better at the actual block building layer? And we think that will be another catalyst for growth on Solana from current applications. And then we'll also bring in new applications that maybe previously thought that they couldn't build on Solana.
Cool. We can touch upon BAM definitely a little later. I want to go back to, I guess, the decision that you guys made at the beginning, which was deciding that you wanted to build out this infrastructure for the Solana blockchain. Was that as a result of this is already would be already competition in another venue, say Ethereum, or was it really tied to your team's long-term belief of the network? Because if we remember, Solana is one of, if not the network with the lowest latency, lowest fees, high composability, high throughput, and very predictable execution. So if you're thinking about which blockchain is going to be used the most in the future by millions and maybe one day billions of people worldwide, you probably thought this could easily be Solana. So curious on your take there, and on what you mentioned as well, that over time, we think that the portion of the yield that is coming from transaction activities, from tips, will outweigh the portion from inflation. And I think we talked about this in the intro. It's still maybe labeled incorrectly as this is just a meme coin chain. So where would this demand for block space come from?
Yeah, there's a lot to unpack there, but
yeah,
I think when we were first starting, there was a few reasons we chose Solana. One is because the competition on Ethereum was already there with Flashbots, and we didn't really want to compete with them. And there seemed like a really new and kind of open field on Solana for us to build without competition, but also Ethereum kind of has these like anti-network effects. When more people use it, the fees get more expensive, and it actually prevents the average person from using it. We were joking earlier about the high gas fees. We probably combined here spent 6 figures in gas fees on Ethereum. And that's just not something that everyday person is going to use for their everyday finances and everyday trading. And on Solana, the median fee is like 1/100 of a penny. It's super small. You still do have some of these like anti-network effects when the chain gets busy. Obviously, the fees are going to go up, but the magnitude of that is much, much less than on other networks. So yeah, we really bought into that, and I think that's definitely come true. We've seen block space almost double in the past few years, and it'll likely double early this year again. So that just means more people trading and lower fees. And so yeah, I think we definitely made the right call. I think that there's obviously a lot of like meme coin trading in 2024, and that's something people like to pick on Solana for. But ultimately, it was an incredible stress test for the network. It's really hard to simulate that stress test. And when there's a lot of money on the line, people do very creative things to make that money. And that just exposes, a lot of times it's like hammering the network with transactions or spam. And so a lot of that trading was incredible insight for the engineering team and our team. And they were able to find the bottlenecks, fix them, ship them in like 2 or 3 months. And the network's just way better today. Like if you use Solana today compared to beginning of 2023 or 2024, it's just way better. Even 2025. Yeah, the network's just gotten way better, and it's all just software bugs and performance issues at the end of the day.
Now, Lucas, one question I have, in your opinion, and also you mentioned your background in robotics, and I was reading about like Coinbase's X for standard AI agents, which in a recent Messari report, they even believe Solana will overtake Base as the most used like infrastructure when it comes to this. Like, what do you think, let's say after meme coins, what's going to be Solana's biggest use case? Is it DePIN that some people say, especially like also like the multi-coin team, which you also know well? Like, is it AI agent payments with Coinbase X402? Is it DeFi? Like, if you had to make a bet, like what's next after meme coins?
I would say trading, not meme coins, but large like crypto assets. So obviously Solana and Bitcoin and Jito and the other tokens on Solana. With the regulatory headwinds coming from the SEC, I think we will start to see more stocks traded on chain. And yeah, there's just going to be, I think it's a trading chain. There's just going to be more trading. I think we'll see a lot of payments and like stablecoin transfers and things like that, but those don't necessarily pay. They're not, it's not like a super time sensitive thing. So the fees on those won't be as high as people trading, and people that trade are willing to pay a lot to get in fast. And that's where all the fees are generated.
Now, you mentioned like the regulatory tailwinds that we have now, especially in the US. You recently had like a homecoming event by, correct me please, by moving the foundation from Cayman back to the US and even having like an event, I believe, in early January. Can you say a little bit more about this, Lucas, especially you being American, being in the space for some time? Like, what made you make this move?
Yeah, we felt like the time was right. And we've been pretty involved with the regulatory side in DC. Just being founders in the US, we want the US to be successful, and we want this to be the place where innovation happens. And given some of the conversations that we're having with different parties in DC, whether it's congressmen, congresswomen, and senators, and talking to like the Treasury and people in the White House about crypto, we felt like it was a time to start making moves to come back. It also impacted like myself a little bit. My wife and I discussed leaving the US several times in like 2022 and 2023 because we weren't sure if the US was going to be friendly to people in our industry. You hear about Operation Choke Point 2.0 and people getting denied access to banks. It's kind of annoying. Like you had to, if you were a crypto company back then, you kind of had to like use special words when you were talking to banks and like don't mention cryptocurrency or blockchain.
It's digital asset and DLTs. DLT instead of blockchain and digital assets instead of crypto.
Yeah. Or like we're just a software development company.
Yeah.
Is usually what we would say.
We work in cryptography.
Yeah. And yeah, so it like impacted me, and like there's definitely conversations about leaving the US, but I think it even impacted Brian, head of the Jito Foundation, even more because he, like when you talk to lawyers, there was just so many legal fees setting up entities in the US to launch a token. And any lawyer you talk to said you should not be in the US, like don't touch the US. There wasn't any conferences in the US. And Brian had to move to Switzerland for a year and was trying to basically set up a home base there. And that was a lot. He like sold everything and went to Switzerland and was kind of moving around and things like that. So he took a big personal risk there. And yeah, with the changing landscape in DC, decided to move home. And so the Jito Foundation was onshored, and there's a 501c4 that was set up to house that. And yeah, it's just from a lot of conversations. Like we were the first team to meet with the SEC crypto task force back in almost a year ago. And then we've gone to the Hill a few times and talked to congressmen and senators and other people in the administration. And they are very curious about the technology and they want to figure it out. And they also want it to happen in the US. And a lot of them don't want to kind of intervene. They kind of want to let the market shape up and see what people innovate on and try not to get in the way. So I think now it's a really good time to be building in the US, but we really need to turn like the vibes of this is good into regulation. So we need the market structure bill and better taxes and some language to make onshoring foundations more secure so that if the political winds are always kind of shifting every 4 or 8 years. And so we really need to get legislation to make this a permanent thing.
And I think like I speak both for Max and myself as crypto proponent, it's great to see this reversal in the US. As you said, I knew a lot of US teams that were considering moving out of the US to Singapore, Switzerland, other places. Now we actually see the opposite. I see like European teams actually going to the US because just like the whole ecosystem of like users, investors, is like so strong, especially like I would argue that probably New York is like the crypto capital of the world right now. And also like what you have been doing, the Multicon guys, also proponents like Chris Dixon who go to the Hill, talk with politicians is very valuable for our company. And we're very excited to see this happening. And also that this stays. And I think it's a net positive for crypto independent. If you're going to have a new administration, I think what's going to be late now is going to be benefit our space for the coming decades. But getting back to Jito itself, and I think we haven't really touched upon it. Maybe Lucas, explain like just very on a high level, what is liquid staking and also what differentiates Jito from other liquid staking? Because we mentioned this term MEV, which we explained at the beginning. So what's the relationship there?
Yeah. So Solana is a proof of stake blockchains. So what that means is basically the amount of stake that your server has. It gives you a proportionate amount of voting weight in the network for voting on what the next block is, and then also being able to produce blocks as well. So it's all stake weighted. And when you stake on Solana or Ethereum, you are delegating or staking that your assets to a validator, and those assets are locked up. So yeah, you kind of lose the ability to use those assets in DeFi, providing liquidity, doing borrow lend, things like that. So what liquid staking is essentially you stake the asset into a staking pool. So this can be Steth or staked ETH from Lido, a Rocket Pool, or Jito. There's a bunch of other ones on Solana like Marinade and Sanctum. And so you will stake that SOL into the staking pool and it gives you a receipt token back. And you can think of that receipt token like the ability to claim that SOL back that you put in the future, plus any accrued staking rewards or like block production fees that have been earned by that SOL at that time. So with that receipt token, it's just like any other token. So you can trade it, you can go use it in DeFi, and there's liquidity for it. So if you want to get in and out of it, you can do that as well. So yeah, liquid staking, you basically get to stake, but you get to keep your assets and you can go use them in DeFi or anywhere else.
Now, maybe last point, where does the MEV come in? Because I feel like that's what like mainly differentiates Jito compared to other like liquid staking projects.
Yeah. So yeah, we thought a lot about stakers when we were designing Jito, and there wasn't any way for the stakers to get the block rewards and like get exposure to the activity on the network before tips. So we created Jito tips, and that was just like another way for users and traders to pay fees on Solana. At the time, there were some advantages to it. Like at the time, there was a 50% burn and the fees only went to the validator. But with Jito and the tips, that money flowed to stakers. So it actually resulted in an increase in the staking rewards. So Jito Sol stakes to validators and they earn the fees from the block production, and those fees flow to the Jito Sol stakers. So you get exposure to the economic activity on Solana through Jito Sol.
Fantastic. It sounds like basically The difference between traditional staking or doing liquid staking via Jito is, firstly, it's more capital efficient and it's more composable. And because Jito's infrastructure is so good at extracting the execution related income, the income coming from activity, means you actually have three potential benefits as opposed to traditional staking.
Yeah, that's correct.
Great. And I just want to touch on this because, of course, part of the reason, aside from the fact that we're actually very excited about, Jito's progression and how it can continue to scale in as part of the Solana ecosystem, part of the reason is obviously we've partnered up with the Jito team to launch a new Jito Sol ETP. And so that's where that underlying is actually the liquid staked asset that Lucas just mentioned. And I think this is important to touch upon because there are what are called staking ETPs in the industry already. But for our investors and people who are familiar with trading ETPs, ETFs, ETNs, you guys will know that they have to be redeemable on a daily basis. And so obviously, if a fund or an ETP is doing staking for that vehicle, they still need to be able to be redeemed on a daily basis. So if an investor wants to sell their assets and the market maker then wants to settle that with the issuer, that needs to be able to happen. And so what that means is for every staking ETP out there, most of them will not be able to stake their full assets under management. And I think that is what can differentiate also the Jito Sol ETP. By nature, all the assets that are accumulated in the vehicle are already being staked through Jito. And as a result, when activity is high and when there's more yield being generated on the Solana ecosystem, on the Solana network, that means that the vehicle, the ETP, should be able to capture a higher proportion of that yield as well. So that's something that we're extremely happy to be able to bring to market, but extremely happy to also be able to do this with a fantastic team at Jito. Anything you want to add there, Lucas?
Yeah, no, I think you captured it perfectly. I don't know what the staking rate is for Solana ETPs in Europe. I assume it's probably like 80s or 90% or so. But with Jito and this ETP, 100% of it will be staked. So you are capturing, roughly 10% or capturing slightly more yield because
Exactly.
it's entirely staked. And as I mentioned earlier, there's many secondary markets for Jito Sol. So you can get in and out of Jito Sol on chain with very large size in the millions or tens of millions with very low price impact. And I think that as this ETP goes live and gets more adoption and other ETPs that we're working on in different areas go live, and there will really be this giant liquidity network effect. So the markets will get deeper and
Exactly.
the ability to get in and out of it will become much cheaper over time. So yeah, you'll be getting a higher staking yield and you won't need to take a big haircut if there's redemptions that you need to give.
Makes sense. Yeah, fantastic. And I think
Maybe let me just ask, because we are talking about the future, there's currently Jito improvement proposal on a potential collaboration with Coinbase. Can you maybe, Lucas, tell us a little bit, like our audience, what it is about and where it currently stays?
Yeah. So there's a post on the Jito governance forum. So Jito, it's a decentralized protocol. And so there's a kind of a governance process where people can vote on different proposals to accept or deny them. And there's one on getting, it's a Jito and Coinbase collaboration. And essentially it will more tightly integrate Jito Sol into Coinbase products. And we're super excited about this. This has been a very long time in discussion with the Coinbase team. And it just gets more Jito Sol minted. And I think a lot of that Jito Sol that's minted will be used in DeFi on Solana and also Base as well. And that's really the network effect that we think about. It's not necessarily TVL. It's more about the liquidity and it just being available anywhere. And I think that the Coinbase angle adds a lot of credibility to Jito Sol. And so we're pretty optimistic about this. And I hope that the Jito holders are as well. And yeah, I'm pretty optimistic it'll pass. So yeah, looking forward to that.
It's very exciting. Also great to see like the two worlds. Even though Coinbase, I would also consider like crypto native, but still also like catering like institutionals to make this bridge. I think for me, like the last question I have generally about Solana, we have Alpenglow, Fire Dancer. If you had to give an outlook very briefly, Lucas, on Solana, what's the most exciting developments for you and what are you watching?
Yeah, I'll kind of go in order from like the kind of like how things will be shipped. So there's a proposal to take block space up from 60 million like compute units, or in Ethereum, those that are familiar with that is kind of like the gas limit, to 100 million. So that will almost double block space. I think that will go live early this year. There's been a lot of good improvements on the protocol side to make the validator faster and be able to handle that. And then we'll see Alpenglow, which is a new consensus mechanism, go live. That will massively reduce the consensus overhead and result in faster finality for those whose eyes are glazing over. Basically, it just means that like if you transfer Sol or something, then it will be finalized within, I think, like a second, 1 or 2 seconds. And so that means the chain can't roll back at that point. Your transaction will be confirmed. So that just means like faster notifications for users when they transfer assets, and it will simplify the protocol as well. Past that, I would say the next thing coming will be multiple concurrent proposers. So that will mean that you can have multiple block producers that produce blocks at the same time, and those blocks kind of get stitched together. And so that will result in better censorship resistant and just the ability for like multiple leaders in different regions around the world to be the exchange, essentially. So lower latency, price discovery, and discovering market information. And then, of course, there's a lot of like infrastructure improvements. You have like Jito's BAM and trying to make block space better for applications and add some more determinism and privacy to the transaction supply chain. You have 00 in their super low latency fiber networks that a good amount of stake is running today. You have Fire Dancer, which is running on mainnet and small amounts of stake. That's built by the Jump Crypto team, and it's extremely fast validator client that will basically make the network scale much more quickly. So there's a lot of cool stuff going on, and I think 2026 people in Solana are kind of just ignoring the noise and the price dips and just continuing to build. So it's just going to be a very good year for Solana. And I think Solana is the fastest moving blockchain as far as innovation goes. So it's definitely a good place to be.
Well, we're very thrilled that you're excited, because if you're not excited, then who else would be, right? So it's great to hear it from the horse's mouth as well. But then the other, I guess, for the audience who that was a lot to cover, feel free to check the things out that Lucas just mentioned online. We've ourselves in the research team also covered quite a few of these Solana developments within our insights. So whether that's with regards to Alpenglow or whether that's with regards to what Fire Dancer could bring, but Jito themselves, given that they were the engineers or the minds behind BAM, I'm sure they have a lot of useful content there as well if you want to see how the Solana technical roadmap is all being strung together by a fantastic network of engineers. On that front, I think it's, we're talking about the future and we're talking about what we can see in the years ahead. And you did mention that you believe over time, and it's something that we're also in agreement with, but we all believe that over time, what is the yield that is being generated for validators, for stakers, for participants on chain will be driven more by activity and less by inflation. Again, the inflation was a way to, let's say, bootstrap security and incentivize participants. But does that mean then, by definition, that investors, more and more of them, will be keen to actually hold liquid staking equivalents of any asset or on any network? Because as a result, then you're able to capture that fee from transactions more efficiently and also use that across a variety of applications. So is that something you expect as a default going forward, that holding SOL will actually be done more and more through a liquid staking wrapper?
For sure. When we started, the total percentage of liquid staked was as a percentage of the total staked assets was very low. It was like 3% or something, and now we're close to 11%. So I think that will continue to go up, and especially as new teams build DeFi protocols that leverage Sol and liquid stake Sol, there will be opportunities to generate additional yield on those assets, whether it's borrow lend or providing liquidity and other things like even like stable coins that use Jito Sol. So I think that's definitely a trend that we're betting on.
Glad to hear it. Sorry, I just went on mute for some reason. I couldn't find the unmute button. Great. So I think that, you mentioned that a lot of this will be driven towards activity, whether that comes from, actual on-chain activity or maybe more intricate strategies to capture that yield. So do you think that's also specifically more active and more purposefully driven yield models are going to be propping up not only in Solana, but across other major networks too?
Oh yeah, for sure. I think we're just scratching the surface of DeFi, and there's a lot of really good teams building cool stuff on Solana and other networks. So
Cool.
I think 2026 and the next few years will be exciting. People are very heads down now shipping. So we should see a lot of cool stuff coming out this year.
Great. We should also have a call, me and you, Lucas, so you can tell me how I can take best advantage of all of this.
Sounds good.
Great. I mean, with this, we can wrap it up. Lucas, thanks again for taking the time to join our podcast. I think it was a great conversation. It was very insightful. We talked about a little bit of like your story, Jito, the early days of Solana, what is MEV, what you guys are doing, what's ahead, a potential Coinbase collaboration, Firedancel, Alpenglow, and some general trends. I'm very curious, like if we would talk in a year again, if like trading, like you said, will be the dominant use case of Solana, or if we still like meme coins going to overshadow it. I think time will tell. Or maybe it's going to be robotics or something completely new we haven't even talked about or think about. That's usually how crypto goes. But with this, thank you very much again for joining. Thanks to our audience for listening in. As always, please like, subscribe, and share our podcast. And very soon you're going to hear back from Max and myself on the next episode of Off the Block. But with this, I wish you a great rest of the day and see you guys soon.